Good evening, good evening. Just did a market video on S&P 500 support and resistance. I'll be putting it up on YouTube in a little bit. Investing and trading in the financial markets pose substantial risk where one can lose all or more than an initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned when fit are simply my opinions and not investment or trading advice. Trade at your own risk. Alright, this video is just going to be broad sectors, and I'll let you formulate your own ideas on where they're headed, but I'm just pretty much plotting long term in a monthly time frame, possibly weekly support and resistance. Bank, you can find this in your Thinkorswim if you have it, but this listed in the NASDAQ of representation of the smaller capitalized banks within the banking financial sector. Excuse me. All right, so from this only started showing data from 2008, 2007, 2008. So from the highs of to lows. This bank looks in pretty good health. At pretty much you have more buyers than sellers. All right, so from lows to highs, we're gonna leave this as support. Two levels of support from lows to highs, and then from your secondary, your higher lows to highs as a potential next measure move right into all-time highs. Let's go right on down the list. Biotechs. Alright, massive move. Alright, and we're pretty much within the realms of a halfway back. Philly Banking Index. By eye, you can see the sellers are still hitting this. Targets much lower. If I'm mistaken, negative. It's just things that I'm not saying these are valuable or valuable trades, but just to be aware of what's going on in these sectors. Semiconductors. Again, halfway back. A lot of these charts look very good. Home builders. More buyers than sellers. So let's draw it up as support from low to highs. Next measured move. All right, so you take your pick. Pretty much again, most conservative, bullish above 20 bucks. Materials. Kind of a wedge. What I mean by that, you have longs breaking, shorts breaking. So this is pretty much you would get this kind of trades. This meaning that it's in a big box. Whether it keeps going higher or lower, it still has work to do to define itself more. Or again, you can still keep it as well. And look at this. You have to identify this continually works until it breaks. You have to go with it. So from these 2009 lows to these peaks in 2011. Alright, gave you a next measured move and went to target. Went straight sideways and fell. Where is it falling to? Let's either next measured move and looks like that broke, or from lows to highs. And we're pretty much just right about there for materials. Alright, XLE. And mind you, these charts look scary. Remember the energy sector. I don't know about you. There's no continuation. Alright, that broke. But in the grand scheme of things, from the 2002 lows to highs, did that break? It looks like it. Nasty. Let's see if I can get it better. So the time when you need to be specific, when pennies matter, from 1938 to 101.52. Yeah, that broke. Yeah. Interesting. Alright, well, energy and a straight sell. What I would use is pretty much highs to lows. Right, and if you really want to just make sure it's tight, let's say if you're short, I would keep an eye on this, on these October highs to lows. All right, so two resistances above, XLE looking nasty. Financials. Can you believe it? Financials is set to be one of the best shorts. Halfway back on the short. Short's defending. Targeting negative. Alright. I say this as a joke. Alright, meaning that it can go lower, but meaning that in order for there to be any upside, you gotta get above 26. It has to clear 26. Industrials. Bullish. And I was going to say very bullish, but not. Maybe. Yeah, wow. Actually, possibly very bullish. Alright, what I mean by that, when a high level trade sets up, meaning that's usually a high to high extension, which, let's see if there was, you had one that blew through. Let's see if I can get this. Bear with me, it says not things that I look at often. Yeah, so you pretty much had 1, 2, you had nothing but measure moves up. 1, 2, and then now 3. Who'd say this would be any different? I think this likely, I do see this one holding. Alright, this high of 2011, high to high, but for any instance, if that breaks, I'll really keep an eye on this one right here. This is an industrials. Alright, so from these October lows, 2011, to highs. Alright, I'll really keep an eye on this area. But however, this chart looks bullish and healthy. Can use a pullback, but healthy. Technology. Mind you, these are the spider selects, but halfway back on the short too. Beautiful. Halfway back on the short. And if anything, you would think tech would be bringing us out of any kind of doom. But no, halfway back on the short to the tick. I know the NASDAQ 5,000. Excuse me. The NQ, they pretty much put in new highs, but XLK is showing weakness. Staples. Correction, what? Alright, little rough chart to it. Alright, of course you have the big support down here at 30. Alright, but since that's a long ways away, let's see where we are in the grand scheme of things. Yeah, nothing. Oh, nothing. Sheesh, straight up monster. Yeah, it was from here once we broke out of here. This had the same double top breakout, so use this as your anchor. Alright, from these highs, bam, you had one pullback, trade it. I would even measure now from here. Yeah, look at that. The reason why I measure now from here, you see how this went high, and again, I was measuring to here, the pullback to target, but you see how we just blew through this target, so now the anchor changes. So now, again, from these highs to highs, that gives you the pullback, and bam, same anchor. Actually, no, that's actually still another one. So I would just go right up. Sheesh, bull market. Yeah, and that was your pullback, and we still are likely to keep making new highs. Staples still going up. I'll use 4180 as your main support. Once we go to target, you can redraw it. Same anchor, 3663. 3663 to whatever new highs are made, right? So, and then that would be your support. All right, staples, bull market. Utilities, looks like a bull market to me. All right, halfway back, then it hold. All right, there's a possible, probably a wedge in, but again, until it breaks, it's this high to high, no good. So what happened here? High, didn't hold. Okay, traded target first, then that blew through it. This is a rough chart. I don't want to make the lie. Is when you have a rough chart, it's sort of, until you really like can identify the anchors to draw from. You don't want to guess or just start letting your eye see things. So right now, what I can just say is yes, it's healthy, extended, but that's just an opinion. Things can go on forever, but I would just use these lows to highs to give you a I don't know, this is a very, very large support level. Alright, so we'll see. Right now, it's, again, still holding in the upper range. So utilities, this is healthcare, monster. Right, let's see if likely this will be the same kind of breakout. Look at this, bam. High level trade. It's not for the faint of heart, but just long we can hold above 52, higher prices. From these lows, let's check this out real quick. From these lows to highs, got another buy to dip right there, setting up. So that may be the, you know, again, just looking at what would likely lead us out. Discretionary. Let's check this out. Nothing you can identify out. Let's check this one out. Okay, so from bam, there you go. That's what it is. Okay, so it has the same kind of breakout trade, right? High to high. So bam, from these 2007 highs to right there, 2012 highs, the pullback that occurred in 2012 as well in October. It actually shows November. Right, went to target and then we just blew from them again. So again, these highs now, we can't draw from these highs no more because we just blew through it. So from these highs, bam, to whenever it stopped, and it's actually never. And you can say that was a pullback if you really want to say that. Let me see if I can get a tighter. Okay, again, let's just draw this again. That was the pullback. That was one. This was another one, you see that? And blew through that. Okay, you see it? And you start seeing all the staircases up. Another one. You blew through it, so where did I draw from here? But then we broke. I don't know, just be cautious. This, again, it is very extended. I would, to be conservative and to not use, but then at the same time to not be so, because rodeo, would you rather stick your stop all the way down below 42 or below 56? It's trading 70 now. So, in my opinion, it is very extended. Doesn't mean it won't go higher, right? But I would use below 56 as your basis for any kind of opinion changes or bias on discretionary. Again, that's pretty much it. It's just discretionary up. Healthcare in a pullback in a high level setup. Utilities, bull market. Staples, bull market. Tech, We're seeing some problems with this. Industrials, bull market. Financials, sell them. Energy, sell them. Materials, within the realms of support, but I would keep an eye on it. Still in an uptrend. Home builders, in an uptrend, same as the materials, and it makes sense. Semis, alright, keep an eye on them, coming into major support. Depending on what banks you're looking at, financials are very weak, but the community banks are showing more strength than the majors. Alright, let's go into a few charts. Alright, a lot of my family is going to start pouring out of this. Alright, Amazon's high to high just broke Friday. Alright, it defended Thursday. There was a slight bounce off of it, but Friday went right through. Alright, 2 lines of support below. I don't know which one's going to hold. It's this next measured move, this sideways base on up. Alright, we're pretty much right on it. Alright, and from there, halfway back. See how far I can go back. And again, you can either go from here on up, but to not play best guess me games, it's a long way down. Alright, we're trading 502, it's another $100 down. From lows on up, I think it's another 50. Yeah, pretty much about another 50. Alright, so it's to your best ability. Amazon, Netflix, Netflix is still holding up. It's still holding up. Yeah, that's either high to high or next measure move is still holding up. Right? And people like these fangs. Let's look at the fang real quick. Facebook bull market. I never seen that though. Facebook had its first and didn't even have a first pullback either. It didn't. It just broke out, and likely it'll be a high to high. No, I didn't use this high then. It didn't even trade so well. We just go stick with the high to high. Oh, okay, there you go. So from here to here, then this high. Yeah, wow, okay. Facebook is in extensions and it's at target. So with that being said, I will use the same anchor. Facebook can come down a lot too, but it's likely buyable around 86 bucks. It targets up above at 132. Alright, so I know this may take people to put salt in their mouth, but just to show where I got my anchor from, Facebook IPO'd. Alright, once it broke out of that, you had one pullback measured from the pre-breakout high to high of its breakout. Alright, gave you its first pullback at 44, went to target, blew through target. Actually, it really didn't, but from high, it did, but in my opinion, blew through target. And since it went straight up pretty much until about here, this was his first real pullback. The high of July 2015. So from that breakout high to high, gave you a pullback, went damn near to the tick, held to target at 109, and we went $9 above. So I would draw again just to be conservative from the same high to high. That gives you a support down at 86. So I would look at a pullback being viable anywhere between 86 and 78. Google. Right, another one, healthy. I would say pretty much this high, too high. Right, the reason why I don't want to give any other levels because they're likely, with the market current right now, trying to use an aggressive setup. Who knows? All right, so this may hold. All right, so you have one support down to 638. Then you have another support. And then pretty much you're all the way halfway back, which is very far down. All right, so again, your two first levels, high to high, and next measure move, which was pretty much December's lows. All right, two highs, 638 all the way down to 530. All right, Google should give you something similar, same thing. All right, Apple. Alright, I'm not going to do it all the way halfway back. Doesn't make sense. Alright, next measured move on Apple. We're trading it. A lot of these charts are showing you that we're in like these next measured moves. Like it's pretty much viable. Alright, Apple's high level of meaning going straight up was broken long ago. And I was in the 113s. Okay, I was wrong. 113s. Alright, so once that punched through, you know you're just gonna pull back. And just to show you, look at this reaction right here. Alright, that was a lot of price. Alright, so let's see if they try to push it through, because if they push it through, ouch. Alright, and it's pretty much either gonna be this high or all the way halfway back from 46 cents. And I know it's been split and whatnot, but just that's pretty much where we're going. Excuse me, no, not 46 cents, but halfway back from lows to highs, all the way halfway back. I'm just trying to think of all the major hitters that really moving. Chipotle. Ouch. Okay. Once you see stocks start to break high level setups, usually they're starting actually to reverse, meaning that it's going to go into a period of where it's going to get liquidated. Not say all of them are the same, but you know, this broke. Your next measured move already broke. And where are you at right now? Let's just go halfway back, see where you're at. You're pretty much right on top of halfway back. So Chipotle below 312, that's not good news. Let's just go and aim at I really don't want. Let's go into the 500. Banks, already know how banks are. Disney. Let's go check out Disney. Disney. Who else do we have? Coca-Cola, Pepsi. Monster. Can go a little bit further. Well, in my opinion, bullish. Next measure move trading. It's a rough chart. Let's see. Here, that broke. That broke. This likely broke. Nasty. But still trending up though. Yeah, it's a rough chart. It's a rough chart. Even from here, let's see if I can. Okay, you had your first. It's a nasty chart though, regardless. Your first pullback that held to target. Okay, so see what you got for the next measured move. Nothing. From here to here, to target. From here to here, nothing, just straight up. So now from here to here, and that breaks. But then from here on up, Alright, so check this out. Your first kind of participation happened in 2009, two highs of 2011. Traded a pullback, and then from there we just apparently went sideways on the target and went straight up. So from there, you draw from high to high. Well, one day we came, well, not one day, but pretty much in time we came and slammed through that. But if anything, what did we run back into? From this anchor, pretty much, remember, went from here to here. So that's why this right here, this low becomes important, because you have to look out for a next measured move. So from lows to highs, what did you trade? Bam. And where are you going? 111. So Pepsi and Coke likely to do well. Let's check out Coke. They usually well, Coke is really interesting. This is at highs. Can be a wedge play, but check this out. Lows 2009, bam. Halfway back to target, squeezed up. So you know we're going to be drawing high to high. From high to high, bam. 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 Coca-Cola is bullish. Next target up at 46. Alright, so pretty much that's it. Let's just go ahead and check out what is this crap. Shub Limited. Whatever this Shub Limited is. Let's just check this out. And got that right. CB. Another rough chart. Sometimes when you don't see a chart working, meaning that if you don't find these fibs working, that means you should not be looking at them. Not to say you shouldn't be trading them or investing in them, but in expecting them to participate. Intel, INTC, straight up sell. It's likely, right, big resistance up above, so meaning that it can go higher before lower. It can go higher before lower, but it's still within a sell. If it can get above 52, sell it. Let's see if I can find you a tighter reference point. Yeah, you can even look at selling 36s, stop above 42s. To get above 42s, then just know that the next resistance is pretty much right about there too, at 44. So that makes it a tough trade, especially if you didn't get in right there. And then pretty much as far as support, they're holding a so far is true. Yeah, they're holding support. Look at this. All right, from the lows of 2009, all right, to those highs of 2010, came down and traded early 2010 to mid 2010. Traded, went to target about 2012. So I'm going to redraw again. From lows to highs, came down. Bam, traded again, went to target. So let's redraw it again. from lows to highs, bam. Alright, so Intel is implying it's going to trade up to 44. Oh, remember that 44 level? Okay, right within resistance. And let's find another one. TWC, Time Warner Cable. I use Time Warner Cable and Verizon. I keep 2 modems just in case one company decides to go poof on me. Alright, Time Warner, bull market. Right? I mean, by eye, there's no arguing that. Okay, I would use this high as an anchor because it went straight up. You see, there you go. This is how sometimes fibs, you'll start to know where to draw from these highs. Why? Because it obviously came out, sold off, so you didn't have no reference from. So meaning that as once this started going and I guess short started getting whacked, it just started squeezing. So in order to get in, let's say now if you're interested in buying and you're waiting for a substantial pullback and never came, and you had to chase it higher. So in order to get in on this trade, the highest high before the dip was your breakout. This is similar to the same what the S&P did from the high to high. All right, once it starts breaking out and going up, that's an anchor to draw from. All right, so I just want to get that misconception that people don't know how to use fibs. Sometimes you have to draw from the correct spot. All right, and it'll make a big difference in the level. All right, so again, from high to high, you give you your first pullback into the damn tick. All right, you got in. All right, to target, we pretty much went sideways. You've seen this so many times. You go sideways at a target, no real pullback. You zoom on. So therefore, you're gonna draw from high to high. So you're gonna draw from these highs now. High, and you're just looking for the next storyline. It's pretty much you had nothing substantial. It's like seriously straight up. Time Warner Cable might be in a pullback. Alright, so 137. Target's 220 next. Let's get rid of this. No. I said no. Okay, market wise. Johnson & Johnson. Why not? Why not? Gotta see the whole picture sometimes. See what I can get with these lows. A little sloppy. I don't like sloppy. Well, actually, yes, that. And then, yeah, that was a little sloppy unless they're drawing from here. Okay, yeah. Bam. Then you blew out. One's target. Yeah, it was sloppy. No matter which way you put it, it's pretty sloppy. You went sideways. Alright, check this one out. Where pretty much you went sideways for roughly for a long time. Yeah, you did go a little up, back down, but pretty much net sideways for a few years. And then you broke out. So now you know high to high. Alright, so whether it's this high, don't know, but you can try from both. This one breaks, and this one should break too. But then what did the next measure move do? Hard to tell. But regardless of which way you put it, still in an uptrend, but just hard to identify the anchor. So, you know, there's other places, Nike. People like Nike. Straight up uptrend. Where can you draw from? It's hard. I guess right here. That was your first trade, meaning from lows to highs. You had your pullback 2009. We just consolidated that profit target and just roared. So from these highs to highs, a little sloppy. a little damn sloppy, if you ask me. Alright, so being that we broke that, what happened on the next measured move? Didn't really trade. So it's a rough. Nasty chart, but once this did start getting going, it's a rough. This one looked like a trade. Another one. Into another one. Straight up. Straight on up in extensions. Rough though. BAC. Have no idea what it is, but we're gonna type it in. Straight downtrend. Bank of America. I couldn't even tell you what that was. Did anybody see that coming? I didn't. Alright, but remember how the XLF looked? Alright, so this was just snap up before the downside. It's a rough chart. Measured move, anything? Let's see if it gives you anything. From high to low, that gave you a sell. Then you just pumped on through, so extensions. Yeah, from low to low, extensions on down, use the same anchor, activate it again. Two lows. But then that one broke. But then when you broke, what happened? Let me guess, halfway back? What do you know? Halfway back. So this is why sometimes I say, you know, it's very frustrating when something would break. What are you running right into? Another sell. Bam, to target. So then since you go to target, you just redraw it again. Activate it, two lows. Alright, what you can even do is see if you can get a cute short off of here. From here, two lows, and watch, see if you get another resistance level. Like a next measured move, and you pretty much did. And I wouldn't be surprised if Bank of America even squeezes even more shorts up into 21, 25, and maybe even 28. Right? It wouldn't be nothing wrong with that. It would be another chance to sell it. Until it gets above 26 and 36, it's still up. Plain and simple. And that's the way the cookie crumbles. Just trying to show a little sectors and a little extended support and resistance weekend on Super Bowl Sunday. Guys, have a beautiful week.